Hi and welcome to this live currency strength indicator table video with me, John, on this Thursday the 16th of March. Here you can see we have our two tables in front of us. We have the trend traders table and the day traders table. These are the same studies but just highlighting different time frames. The tables auto update every 5 minutes 24/7, meaning that our members can see how the markets shape up in real time. Now, obviously, these tables, we use these every single day ourselves, and these help us strip out the noise in the markets and help us to focus on actionable pairs. However, today, you can see that we've only got two highlighted currencies, and they're both on the same side of the table. As you can see, that the yen tops the table in strength, and the pound is the second strongest currency. Now, when we see the tables like this, it can give us a really good idea what not to do as well. So you can also use these tables to know sort of when to be in the market and when not to be in the market. And today is one of those days where it just might pay us to not be in the market. It might pay us to actually just stay away. And the reason being is because there's a lot of volatility in the markets. You've probably seen it yourselves already. There's been lots of major moves going on. There's been lots of news reports going on as well that are causing this uptake in volatility. And that volatility could knock the strength meter around a little bit because the markets are chopping and changing very quickly at the moment. And the news today is going to be one of those which will probably add to that volatility. Now you can see here, I'm just going to highlight there's a potential. There is an ECB rate decision today and press conference. Now the ECB have said that they're going to hike to 50 basis points to 3.5%. Now the problem with that is we've obviously had all this recent volatility in the market, and especially with the situation going on with Credit Suisse, is almost putting pressure on the ECB to not hike by 50 basis points. And there's a lot of calls for either 25 basis points or even to pause hiking altogether. The problem with that is it puts the credibility of the ECB up for cause for concern. So the ECB will not want to back down from this 50 basis points hike. However, they've also got to be aware of the global situation with the banking sector at the moment, and it's going to be a really interesting day in terms of news, especially that press conference that follows the ECB rate decision today. Now that's going to cause a lot of volatility in the markets. Now volatility is not necessarily a bad thing. Obviously we like volatility because we get these larger moves in the market that helps us with our trading. However, today just might be one of those days where it's best to sit out, because you can see Euro Yen tops our day traders table here, and it's the market that I've got in the background here. So if we just go take a look at Euro Yen, from a technical perspective, it's looking really good for some further downside movement. We've broken out of this bullish channel in here. We found some resistance up at the 145.50. We broke through the bearish channel, the bullish channel, sorry. Opens the door up to a move down to the 138 handle. We're also trading below the 200 daily moving average as well. So we've got all these signs really that says that Euro Yen could continue to the downside here. A lot of risk off in the market as well, which helps with the yen strength. So it's suggesting that we should be short this market. Now, if I go to a lower time frame, I've marked out an area of interest, which was the 141.50 handle. And the 141.50 are the previous lows in here. Okay, so the reason why I marked that out was because obviously we've found support there in the past. Price has broken through. We've rejected on a couple of occasions here. So I wanted to see if price would hold below the 141.50 to potentially see Euro Yen continue to the downside. The problem is I think you've got the risk of the news today, and I think if I was to take a position, let's say at the 141.50, where really would be a safe stop? Now, chart partners saying that 3-week rolling ATR at the moment is 168 pips. So let's just mark out 168 pips. It's around about here, okay, just about there, around about the 143.20. Now, to me, that is in a very dangerous spot because we've got all this momentum that's been push to the downside there, when the market has moved very quickly through that point. So really, if I want to feel safe with my stop loss coming into a high impact risk event, I'd want to be above previous structure. The problem with that is that leaves us with a stop loss of 362 pips. Now, if I play the downside move, we're expecting price maybe to come to the 138. That's only a 350 pip move, so we have a negative reward to risk ratio there. So I think it's one of those days where we might just have to sit on our hands and see what happens next. Maybe our trade isn't the one right now, but maybe it's the one that follows this. Let's say if price reacts quite aggressively today and we hit the 138 or even the 135 spot 50 down here, that would be a tremendous move to potentially fade back to the upside. Okay, because if I look at this 4-hour time frame, I haven't marked it in, but price has basically come into this previous low here, which was around about the 139 spot 50, and it's rebounded since then. So one to watch definitely. Now, another chart we actually spoke about yesterday was Aussie US dollar, and you can actually see that it's come on to the day traders here now. It wasn't featured yesterday on the trend traders or anything like that. In fact, Aussie was on the weak side of this table. Just shows you how things are chopping and changing. It's now on the strong side, which is not particularly the side we want to see it on, because we're looking for short opportunities on Aussie US dollar at the moment. So if I just go into Aussie US dollar, you can see that price rejected our level of interest yesterday, which was the 0 spot 67 handle, is driving lower. I'm expecting it to maybe come down to the 0 spot 65.75 or even the 0 spot 65.25 handle. However, it's on the wrong side of the table at the moment, which is really sort of putting me off looking for a move to the downside at the moment. So yesterday I was talking about there is potential to short this. Now, not so much. You know, I do have this level pumped in here around about the 0 spot 660 highs, but there's nothing really there. I think, to be honest, if that's going to remain on the table as it is, we may see price come back up to the 0 spot 67 handle, where, you know, if we do see the change on our tables then to say that the Aussie is appearing on the weak side, dollars coming back to the strong side, then we can potentially look for something there. But a lot of mix matches with the currency strengths at the moment. Obviously, yen the strongest because of the fear in the market at the moment, but we do have to be aware that we do have that ECB news coming up, and I think that's really going to shake things up. So today just might be one of those days where we take a step back. I just want to quickly touch upon, obviously, if you're in the CAD yen position from a couple of days ago at the 0 spot 68 handle, let me just go to a 4-hour time frame. The 98 handle. Let's go to an hourly. If you were in here, price has hit one of our targets. We were looking for targets, first targets down at 96, which is just through here, which is around 205 pips away, or 200 pips away. Looking for secondary targets down at the 95 now. So I've closed half my position, looking to see if price will come down here now. Stop losses are at break even, so we can't lose anything else on the trade now. If price does spike back to the upside, then so be it. I'm holding this now down to see if we can reach 95. So hopefully that all made sense. Just be very, very careful in the market today. You know, it's better to sit on the sidelines than put risk into the market and end up obviously losing that risk unnecessarily. So thanks for watching the video update, and I look forward to speaking to you in the next one.